I have some exciting news for our VA buyers. The lending limits for the VA loan has changed. Let's get into it on this week's episode. Welcome back to another episode of Fridays with the Fiddle Fig. I'm John Selby with the Selby team, and it is an exciting time for the VA buyers, and San Diego being a Navy, a Marine hub here. We've got a lot of veterans, and I have a lot of veteran clients, so I'm excited to share this news with you guys. The VA guidelines have now basically gotten rid of any lending limits for the VA loan. And so I'm going to talk about a few things what that means for you VA buyers here on this episode today. So the first thing, the VA lending limit being lifted, what that means now is you are not constrained or confined to a certain purchase price any longer. In the past, or actually just this past year, the lending limit was $690,000 approximately, which meant that the VA buyers could only purchase a house up to $690,000 with 0% down, and above that, they would have to pay 20% of the difference. And as we know, San Diego is a relatively expensive city, and this puts some constraints on my VA buyers who wanted to purchase some bigger properties. So a few things that I think that how this can benefit, or what this can do in the VA buyers' favor. One is, obviously, you can purchase a house that's a little bit bigger in an area that you want to be in. We would never want you to, stretch your qualifying abilities. They're still going to have qualifying restrictions on that with debt to income and all of that. But it does allow you to be a little bit more flexible in what you're looking for. And the second thing is it's also going to allow some VA buyers to get into some more like house hacking investment type situations. I've had a lot of single VA buyers who want to get in a position where they're not paying as much on their mortgage. They want to get either roommates or they want to get multi-units, but those multi-units are out of reach for them when it comes to the lending limits. Now that this has been raised, my VA buyers can get into a multi-unit for $800,000, $900,000, have the units potentially pay their mortgage, and they're actually going to be living for relatively low expense or free in some situations, depending on how hard they hustle. So this is a really awesome thing because it's going to allow a lot more flexibility with your purchasing abilities. Of course, with the positive, we have to have a slight negative. So the one negative thing that I can find with the VA guidelines changing and effectively getting rid of any upper limits on your loan is that the funding fee is going up a slight amount. The funding fee is basically the fees you have to pay to the lender and to the VA to process everything and to back these loans. It is going to go up a little bit, but it is negligible when you consider the cost of the loan previously. If you could only borrow $690,000 without any down payment, and then you had to pay 25% over that. So if you had to buy $100,000 over $690,000, you'd effectively be putting around $25,000 down. You can now do that with zero down and a slight bump in your funding fees. So it's a negative and a positive. It all works out in the end. I think it's going to be really great for the VA buyers here in San Diego. If you want more information on this, please feel free to reach out to me and I can connect you with a mortgage lender. And they can get into all the nitty-gritty regarding interest rates, regarding what exactly the different fees are, what this means for you, and how you can apply it into your purchasing here in 2020 or beyond. And that's it for this week's episode. I hope you enjoyed it. We'll see you next week.